Hello, everybody. Okay, so it is Monday afternoon, and wanted to run through my 37 ETFs and my ETF watch list in alphabetical order. As usual, I might say nothing about one or two and a lot about some. And another reminder, ticker.art, check it out. And I know a lot of you are like, I don't have crypto or I don't know anything about this. Well, I didn't either. Like 6 weeks ago, and now I run one of these things. So you might consider learning something new. I have put a video there about how to buy your first NFT. So yeah, you might want to open yourself up to learning something cool and new. So give it a shot, or at least give it a heart on your favorite ones. There's some really pretty ones there. I'm surprised nobody's bought the BP one yet. That's actually a favorite of mine. So let us walk through these things, starting with DBC, which is a commodity ETF. This one's been going crazy because of oil, principally. It had been just sort of pulsing its way lower, and then something changed about a month ago, and it's just been rocketing higher. So the world economy is going to get the 1-2 punch of rising interest rates and higher energy rates. That should do wonders for profits, as if those mattered anymore. Here are the diamonds, and again, I'm recording this on Monday afternoon, so the market is closed. This incorporates Monday's data, and the diamonds are working their way toward what hopefully will be a failure point right here, around 336, and it's been this nice steady downtrend. There was a brief interruption here. God knows why. Well, no, God does know why. It's the Fed, but then it resumed down here. The market really, really, really wants to go down. Especially, I'm not going to go through them, but I went through the 90 different symbols in my kind of younger stocks list, and almost every single one is just in a state of crumbling and collapse. Everything's failing. It's what I call a private bear market's going on, whereas the highly visible headline stuff is being propped up so that this ruse can continue as long as possible. But look under the hood. It's getting ugly out there. Here's the emerging markets, which are a little more realistic. Powell's not directly involved in these, and these have been downtrending ever since pretty much the year began. It is down channel like so. Fightbacks now and then, but on the whole, clearly in the descent. EFA, this is the Europe, clear trendline failure about a week ago. Right there, bang. Mexico, close to a trendline failure, very close. And our old favorite EWZ, which I described late last week, is maybe take a second bite of this apple, and sure enough, down it goes. The next failure point right here, 31.72. Precious metals, I really don't even think about these days. I know gold got a little bit of a bounce here, but boring, dull, not interested. ITB. What is that? Is that like real estate or something? Don't even remember. Yeah, this is the housing. Pretty dull, but here's the support level here, 65.08. That would be the next failure point. Long term, it's not dull. It's pretty precarious way up there. Not dull at all. My perpetual obsession, the small caps, IWM, range bound all year long. And as I've said, this is 2 steps needed. Step 1, get below 213.57. Get below that September 20 low. Break this annoying higher lows nonsense. We got to do that first. You break that means you've broken this trend line, which is the big kahuna, the March 9, 2009 trend line. And if you can do that, it sets up the prospect of a range failure, which would just be, I can't imagine how obnoxious I would become if that would happen. I'm sure you could, though. IYR, another real estate one, trend failure 2 weeks ago. It's begun the collapse. Watch it burn. IYT, transports, working toward their own next failure here, 240.70. The banks, Dullsville Incorporated, couldn't care less. Yawn. MDY, This is basically a carbon copy of IWM. OEF, the S&P 100 ETF. This one just slipping lower steadily. It peaked, lifetime peak, a month ago, and it's been just eroding ever since. The cubes got fun all of a sudden. The cubes were annoying for a while, but they've really gotten fun. We have been dropping on these for a solid month. And, Facebook, a $1 trillion company, can't even keep their website up. Helped today. And Amazon is down 15% from its peak, which I think is God's punishment for Jeff Bezos dumping the mother of his children for that trollop, but that's just my opinion. Cool stuff falling down. Bulls are losing, like what I see. Silver, bleh. SMH, pretty bleh. This has been falling along with the NASDAQ, but not that interesting. Spiders, of course, you can't ignore no matter what. And it's a pretty cool chart. We did today on an intraday basis, and let's zoom in for this one. An intraday basis, we got down below, lower here, but check out what's going on. Old Jerry's up to his work. Here's the support, 428.86. And we got like a pixel below it here, and then lower and then lower. In other words, Thursday broke it, but closed above. Friday broke it even more, closed above. Today broke it even more, closed above. Isn't that something? Isn't that something? But it's slowly eroding. You can see right there. It is breaking down. TBT, which is sort of kind of a way to look at interest rates, is the ultra short on the bonds. It's kind of lingering. Bonds have had a big run lately, downward, and they're just sort of precariously perched. They're underneath this important price gap here. So the big question is, will they conquer it, or, frankly, more likely, will they succumb and start to burn down here, and interest rates be creeping up again? TNA, this is the ultra bull on Russell. Don't worry about it. USO, kind of talked about oil already. XBI, biotech, not a particularly clean pattern, but range bound, working its way down towards support. Home builders, XHB. This one also it's kind of a complex pattern here. All this is the top here, and there's a top within a top, which has already been complete, like so. So the next level to break would be down here. XLB materials. Zooming on here, a little bit of the same thing, where we've got a large topping pattern which is not complete, and then a smaller pattern which has completed, and so we're range bound down here. Here's what we need to break next. 78.33. XLE. Used to be an obsession, no longer, as you know, for obvious reasons. Not much of a clear chart there. I guess the only thing I can say is that we're nearing the peak of the range for the entire year, so it's going to really take something special to give it any more juice. XLF financials, not that interesting. XLI, the industrial select sector. This one did also sneak just a teensy bit on Friday below the support, but closed above it, and so that still needs to finish up. XLP, consumer staples, a frequent mention here. This has been a pretty steady performer, and we have been pretty much going on every day since September 2. How many things can you say that about? But this is a nice, solid downtrend. XLU, don't care. XLV, don't care. XLY, consumer discretionary. XME, this is the Spider Metals. This is a range-bound situation too. Kind of an upper and a lower range here, but not that interesting a chart. XOP, this did manage to start pushing above its own Fibonacci retracement. So if you're looking for a bullish check mark, that could be one right there, because it's kind of reached escape velocity on that one. And finally, XERT here, XRT, the retail. Thanks to Bed Bath & Beyond, which ticker art does have, by the way. We had a nice plunge on Thursday, and now we're just kind of lingering below. All right, well, that's a nice long 10-minute walkthrough, and that'll be it for the day, and I will see you on Tuesday morning.